And a report by Bank of America, Merrill Lynch, and U.S. Trust entitled A Transforming World identifies trends driving economic change in the coming years, and economic growth in emerging markets will be a big part of the global rebalancing. Joining us now with us is one of the analysts that help author the report, Chris Wolfe, Chief Investment Officer for Merrill Lynch's Private Banking and Investment Group. Chris, thank you for joining us.
Thank you for having me.
So, Chris, very briefly, what is the main takeaway from this report on the emerging market side?
Yeah, from an emerging markets perspective, it's all about the way we think growth will be transformed. It will be shifting from just pure infrastructure plays more towards consumers, more balanced very broadly. We think that balancing of growth is going to create opportunities.
Well, one of the big takeaways, as you just said, is the fact that we're going to see a really big growth in the middle class. In fact, the report says by 2013, the number defined as the middle class will likely double to 2 billion.
Yep.
So where are the opportunities in that?
Yep, I think in a couple of areas. So the first is when you talk about consumers in emerging markets broadening their appetite for goods, it starts with housing, it moves on to consumer staples, dry goods. And while these trends have been largely talked about, I think, in a lot of other places, what we think the opportunity lies in is not just the emerging markets, the stock markets themselves, but beyond that, frontier markets, places like Vietnam, Indonesia, Thailand, the Philippines that will benefit from consumers in Asia in particular that are likely to come up that income curve.
All very good in theory. How do I put my money in Vietnam, in Indonesia, and in the Chinese middle class?
Yeah. So we're telling clients three things. The first is, from a U.S. perspective, they've been so defensive for a number of years. The first message is very simple. You got to be more global. The growth is still in Asia. And given the relative attractive valuations in Asia, we want to focus there. That's the first thing, owning companies in Asia. The second is, in those frontier markets, we think things like exchange-traded funds, certain types of active strategies that will be stock picking in areas like the banks, as well as some of the consumer companies, look relatively attractive from our perspective. And third is we think there'll be lots of volatility along the way. And so we're looking at alternatives, things like hedge funds and things that can play both sides, things that may be winners and losers out of this great transformation.
Which specific industries would you be focused on?
Yep, I think there are two that we would talk to clients about, and we certainly do in the report. The first is the banking sector. In order to facilitate a lot of the growth, we expect to see creation of credit. Banks will be a big part of that through the growth of consumer credit across this transforming landscape. And I think the second is we're going to look at some of the infrastructure companies. One of the big themes, for example, we talk about in the report is water. Very simply, where the people are, the water isn't. Infrastructure to transport it, to clean it, to recycle it is a big theme for us over the next 15 to 20 years, particularly in the emerging markets where we think the problem is the most acute.
Well, you mentioned water, and the report does stress that with this growing middle class, there's going to be a big strain, a bigger strain than ever on the natural resources.
Sure.
Which does yield opportunities. So how do I invest in the fact that people are going to need more water?
Well, I think a couple of ways. One, there are companies, not just in the U.S., but in Europe, and starting to be a growing number of them in Asia that are part of that infrastructure development. So investing in those types of companies that build the infrastructure, the water pipelines, the transportation networks, the desalination plants is one way to do it. The second way to do it is to invest in the utilities, the companies that will be doing the servicing, et cetera. We don't have that infrastructure built very well across all of Asia just yet, but we expect that as it is built, we're going to need those utilities on top of that to monitor and process that.
Now, the strain on global resources means that there's going to be a greater demand for commodities.
Sure.
So which commodities in particular do you think we should be investing in?
Well, the hot story has been over the past few years industrial metals, because it's been all about the infrastructure growth. We think that's gone a little bit far ahead of itself.
What about food and agricultural products?
Food and agriculture has been the next place. If you have a rising middle class, you see greater demand for proteins, and what that does is it pulls all the wheats, the corns, and all of those types of things forward in terms of their usage. And what we see is a supply-demand mismatch that ultimately results in higher prices, in particular for agriculture commodities.
Well, you mentioned protein, and pork is very topical these days.
Sure.
Smithfield Food being acquired for $4.8 billion by Chinese meat producer Shuangwei. So are we likely to see more of these kind of deals with Chinese companies or Asian companies buying U.S. or global food producers?
So we think so, because what you have is a place in Asia that you've seen falling margins, competition's rising. You still have a lot of cash and opportunities to expand businesses from an Asian perspective. What that means is that the opportunities are in the US or Europe or in Latin America. We expect cash-rich companies to look to diversify their growth by buying companies in US and other markets. We think the trend will continue.
Okay, well, we're going to have to leave it there, but thank you so much.
Thank
Chris
you.
Wolfe, Chief Investment Officer for Merrill Lynch's Private Banking and Investment Group.